Hello and welcome to another Pink Pig Financials blog. I'm Ellie and today I'm talking about bank rules in Xero. So if you know anything about Pink Pig, other than the pink and the pigs, it's probably that we love our technology, our apps, our automation. You've got probably had a long list of things we've asked you to download. I mean, I say we love, Cheryl's definitely the one leading the charge there. But we always follow, and everything that we use does end up making our lives easier. So obviously a big thing of the technology we use is Xero. We're definitely Xero ambassadors, and Xero has a lot of nifty little tricks to sort of make all of our lives easier, and one of those is what's known as bank rules. So the first obvious question is, what is that? So when we set up a rule in Xero, it means that it's going to autofill any transactions that match a certain criteria, rather than us having to manually fill in every single box. So we've linked a video here that will show you how to do it, but I'll tell you as well. So you'll click the reconcile on your bank feed. You'll see a little options menu in the right of the transaction, and you'll see an option to create a bank rule. So you'll set the criteria for the rule. It will most often be based on the name of the payee. You'll select the contact, and then you'll fill in the description, the nominal code, so what it is, whether it's a travel expense, advertising, etc., and then the tax rate. Then you press save and enjoy the magic. But please, before you quit right here, run off to Xero and merrily create as many bank rules as your heart desires, there are some things to bear in mind. So the first thing is that if you are VAT registered, and this is a transaction that you will be claiming the VAT back on, we do need a receipt or an invoice attached to the transaction to prove that VAT to HMRC. So yeah, anything that you'll be claiming the VAT on is not ideal to set up a bank rule, because we're not going to have anything attached to it to prove why you're claiming the VAT back. It's also not ideal for your incomings. Again, it's much better practice to have invoices set up that will correspond every time a client pays in. Much easier to keep track of, who owes you money, who's paid, that way. And there are certain places where you're more likely to not be purchasing the same kind of item every time. So Amazon is a great example of that. Get anything off of there. It could be at a supermarket. One day you could be getting your £3 meal deal while you're en route to a client meeting. The next time you could be getting cleaning supplies for the office. So setting up a rule and them always being coded to the same place, that's not going to be the best for that. So what is it a good idea for? Well, be honest, if you're not VAT registered, it's going to apply more to you. So like we said, things where it's going to be the same every time. Maybe your Zoom subscription, for example, you know exactly what it is, you're not trying to claim any VAT. It'll be a quick and easy way to get your bank feed nice and tidy. If you are VAT registered, like we've said, we do need paperwork, but there are some things where VAT is never going to apply. So for example, your congestion charges, a lot of car parks won't have VAT. You can set up a rule for that. So hopefully that's explained why we sometimes do set up rules and why sometimes we choose not to. But if you are interested in the other sort of nifty little tricks you can find in Xero, then contact us for a chat and we'll be happy to show you.